Hey, hey. 1, 2, 3, 4, 5, 6.
to AMRO's press conference on the launch of the ASEAN+3 Regional Economic Outlook, the AREO. I'm Daisy Wong with AMRO's communications team. Our speakers today are AMRO Chief Economist Dr. Hoi Ko and Mr. Alan Ng, his Group Head of Regional Surveillance and in charge of the AREO. We'll start today's press conference by a short presentation by Alan, and then we'll take your questions, both online and from journalists with us here. As we speak, the embargo of the AREO has ended at 10:30 a.m. Singapore time. And without further ado, I think now I invite Alan to give us a presentation. Alan, please.
Right, good morning everyone, and thank you for joining us today. In the next 15 minutes or so, I will walk you through our analysis of the regional economic outlook, which has of course dramatically shifted in recent weeks. Today's presentation will cover three key areas. First, the macroeconomic prospects facing the ASEAN+3 economies in light of the recent trade developments. Second, the changing inflation dynamics across the region. And third, our long-term growth outlook. The latter two areas are from the thematic chapters of our AREO this year. Let me begin with the assessment of our current macroeconomic environment. I want to emphasize four key takeaways on our region's near-term outlook. First, the tariff escalation from the US on April 2nd and the developments since represent a massive shock to the global trading system and to the region. Second, we are navigating through extraordinary uncertainty. The tariff situation remains highly fluid, with potential for escalations and further changes. Third, despite these challenges, ASEAN+3 economies are positioned for resilience. Our regions enter this turbulent period from a foundation of robust domestic demand, reduced dependence on US markets, and available policy space to cushion the blow. And fourth, even as we manage the immediate disruptions, we must maintain a focus on the longer-term priorities, especially in diversifying our exports, deepening regional integration, and strengthening the foundations for longer-term sustainable growth. Now, the initial Liberation Day tariffs have disproportionately targeted ASEAN+3 region, with 13 of our 14 member economies facing some of the highest tariff rates globally. After accounting for the initial lists of exempted products, our region faces an average tariff rate of 28%, significantly higher than those imposed on other economies such as India and the European Union. Now, exposures varies across economies. Cambodia and Vietnam are the most exposed, with US-bound exports representing over 30% of their total exports and more than 25% of their GDP. But for most regional economies, affected exports represent a relatively modest share of total exports. Overall, about 12% of ASEAN+3 total exports face these new tariffs, and this corresponds to roughly 3% of our region's combined GDP. Now, even with the recent 90-day pause and the ongoing changes to the scope of the tariffs, we are experiencing an unprecedented level of trade policy uncertainty. Our analysis reveals that this uncertainty itself, even without the tariff actually being implemented, will have adverse material economic impact. And what we are witnessing is truly extraordinary. By some measure, the current level of trade policy uncertainty is 14 standard deviation above historical average. That's a 14 sigma event. Right, to put this in perspective, it's 3 times more severe than what we experienced during the height of the previous US-China trade war in 2019. Now, this extreme uncertainty is already affecting investment decisions globally, disrupting supply chain planning, and casting a shadow over global economic activity beyond just the 90 days. Let me share with you our growth projections. Now, the baseline forecasts in our AREO 2025 were unfortunately finalized before the April 2nd announcement. And given the recency and the fluidity of the current situation, we will be revising our baseline forecast in the coming months. But to provide a sense of potential impacts, we have actually modeled 2 scenarios since the finalization of our AREO. Now, in the first scenario, the Liberation Day scenario, where the initial April 2nd tariffs are fully implemented and with the assumption of no policy support from the region, the region's growth would fall below 4% in 2025. And if it's sustained, it will ease further in 2026. Now, the impact will fall unevenly across different economies, with those more trade-dependent more affected. In the second scenario, the pause scenario, which reflects the more current situation, but with US-China trade tariff at above 100%, the growth outlook will be further reduced for the region as a whole. And this is given the impact on China, the slowdown in the US, and the spillover to the rest of the region. Let me reiterate, however, that these are scenarios and situation remains very fluid. Despite these challenges, I want to emphasize that ASEAN+3 is entering this period from a position of strength. First, robust domestic demand remains the primary driver of regional growth. Consumption and investments have consistently supported economic activities, and its importance has only grown over the years. Second, while still key, our region has actually reduced its reliance on the US market over time. And this is very important. The share of ASEAN+3 exports destined for the US has declined from about 24% in 2000 to less than 15% today. And meanwhile, intra-regional trade has actually flourished and now accounting for about 45% of total exports. That's three times higher than the exports to the US. And this highlights our region's strengthening internal trade ties and our growing economic integration. And if you look at final consumer market, value-added exports, China has in fact overtaken US to become the region's largest final demand market. And we have also seen increasing share from other parts of the world, such as India. Lastly, third, most ASEAN+3 economies maintain sufficient policy space to respond to economic challenges. The majority of our member economies possess moderate fiscal and monetary flexibility, allowing them to support growth amid trade disruptions if necessary. And given the strong headwinds from the tariff shock, we may see a shift towards more supportive policy stances in coming months. So to summarize our near-term outlook, first, make no mistake, the US tariff actions represent a massive shock to the global economy and to our region. And second, we are facing extraordinary uncertainty with the likelihood of continued policy adjustments and market reactions in the months ahead. Third, while these challenges are serious, the region is entering this period from a position of resilience. Our region benefits from strong domestic demand, reduced reliance on the US exports, and available policy space to cushion the impact. Finally, longer-term shifts will be key for the region's resilience beyond this near term, especially in the area of export diversification, deeper regional integration, and the revitalization of longer-term growth. And this is something that I will return to. But before that, let me turn to the second chapter of our report, which examines the inflation dynamics across the ASEAN+3 economies. In a sense, this analysis is particularly relevant as we navigate the current environment, understanding how the region has managed inflation and supply shocks since the pandemic offers valuable lessons for policymakers responding to the present challenges. After decades of price stability, ASEAN+3 economies, just like the rest of the world, face sharp inflation surge beginning in 2021. However, our experience differs notably from others in the region, others outside the region. So, while inflation peaked at over 9% in the US and nearly 11% in the Eurozone, ASEAN+3 inflation peaked at just 3.6% in 2022, and volatility was also more contained. And this more moderate spike helped limit welfare losses across our economies. For example, by late 2023, overall price levels in the region had risen by only less than 9% from pre-pandemic levels. And this compares to over 20% in the US and in the other OECD economies. And throughout this period, inflation expectations have also remained well contained. Our analysis reveals how inflation dynamics has evolved over this period. And what is particularly notable is that supply factors have maintained a more prominent role in driving core inflation than in the pre-pandemic period, including now. And ASEAN+3 policymakers actually responded with a well-calibrated mix of monetary, fiscal, and other policy measures. Central banks deployed interest rate hikes, fiscal authorities implemented targeted subsidies, cash transfers, price regulations to alleviate the cost of living pressures. And this complementary approach helped contain inflation while supporting vulnerable households and businesses. Now, looking ahead, inflation management is likely to become more challenging as structural shifts increase the frequency and persistence of supply-side shocks. climate transition, geopolitical fragmentation, and demographic changes may all contribute to more volatile price environments. Three key lessons emerge from our recent experience. First, accurately diagnosing the root causes of inflation, whether supply or demand factor, is essential for effective policy response. Second, maintaining strong policy buffers provides crucial flexibility during crisis periods. And third, greater coordination across monetary, fiscal, and structural policies will be increasingly important as inflation dynamics become more complex. Finally, let me turn to our third chapter on the region's long-term growth. Now, while near-term trade tension demand our immediate attention, I think it's important for us not to lose sight of the deeper structural challenges that will shape our region's developments for the decades to come. Now, in this chapter, we examine a concerning trend, the gradual but persistent decline in our region's potential growth. For decades, ASEAN+3 has been the powerhouse of global economic expansion, contributing over 40% of world GDP growth. And this is still true. But we are slowing down. And this is not merely a cyclical downturn, but a core structural trend. Our analysis shows that the region's potential growth has declined from about 6% in the early 2000s to approximately 4% now. And when we examine what's driving this decline, we find that approximately 70% stems from slower investment or capital accumulation, while slower productivity growth accounts for another 10%. Now, without policy actions, our projections suggest a further decline to below 3% by 2050. And this projection itself is subject to a lot of uncertainties and risks. So in our simulation, we also had a scenario in which we model in severe global geoeconomic fragmentation between US and China. And this could cost the region an additional 0.5 percentage points of growth annually going forward. And when we look into the data, insufficient productivity growth is actually the most common challenge throughout the region. And one key factor behind the declining productivity growth is the changing pace and pattern of structural transformation across our economies. Our analysis reveals that productivity gains from structural change, that is the reallocation of resources from less to more productive sectors, have actually fallen to just 1/3 of previous levels over the past decade. Now, let me dive deeper into three key patterns of structural change in the region based on our analysis. First, ASEAN+3 as a whole has actually continued to industrialize rather than de-industrialize. And this stands in contrast to the experiences of many advanced and emerging economies worldwide. However, this regional trend masks significant variations across economies. China has consistently upgraded its industrial capacity, increasing both manufacturing employment and value-added shares. And this is also true for the CLMV economies. And more advanced regional economies have also enhanced their manufacturing output while reducing the share of labor-intensive activities. And this is a natural evolution of their industrial advancement. But more concerning is actually our middle-stage economies like Indonesia, the Philippines, and Thailand, where industrialization has actually stalled somewhat since the global financial crisis. Second, despite the economic growth over the recent decades, productivity gaps compared to global frontiers remain very wide, and in some cases are actually widening. For our middle-stage economies, manufacturing productivity has essentially stagnated relative to global leaders in the past 3 decades. Even our most advanced economies face challenges. While their manufacturing productivity outpaced global frontiers outside the region, both services and agricultural productivity continue to lag behind. Third, the transformation towards services in the region has been ongoing, but is incomplete. Today, approximately half of our region's workforce is employed in services, up significantly from just 27% in the mid-1990s. However, our services sector still falls short of similar peer economies outside the region in both employment and value-added shares. Most concerning is that workers moving into services have predominantly entered into lower value-added services. And these patterns explain why substantial employment shifts have only generated limited increases in value-added and productivity. The good news is that the declining growth need not be our region's destiny. With well-designed policies focused on productivity-enhancing reforms, we can revitalize our growth potential. Our simulation shows that if the region implements reforms successfully to improve productivity, close infrastructure gaps, and enhance human capital development, our potential growth could increase by more than 2 percentage points on average over the next 2 decades. By 2050, this could lift potential growth to 4.2% from 2.8%, and this represents a 60% boost to long-term growth potential. This is my last slide. Now, looking ahead, while there is no one-size-fits-all formula across our diverse economies, 5 key policy themes emerge from our analysis that could guide ASEAN+3 economies towards a stronger, sustainable, longer-term growth path. First, we must continue to upgrade our manufacturing capabilities. Second, we need to prioritize high-skill services development. Third, closing investment gaps is essential, both in productivity-enhancing infrastructure and in human capital that aligns with future global demand. Fourth, innovation and technology adoption must accelerate. Emerging technologies such as in AI and robotics can redefine structural transformation by enhancing productivity across multiple economic sectors simultaneously. Fifth, and perhaps most importantly, strengthening state capacity is fundamental. Even the best designed policies require effective implementation. Now, let me close my presentation with this perspective. The region's economic miracle of the past decades was not preordained. It was built on bold policy choices and with the regions working together and actively engaging with the rest of the world in an open, rules-based manner. The challenges that we face today can be overcome with the same level of commitment and vision. Let me end my presentation here. Thank you for your attention.
Thank you for the presentation, Alan. We have received quite a number of questions from you in advance, so let us start with a couple of them first, but please feel free to continue to send us questions, and we'll try to answer them as much as possible. We have the very first question from Jakarta Globe, and actually from a number of media in the region, including Reuters. The first question is, what's the impact of Trump's tariffs on ASEAN+3? What should be the policy response by ASEAN+3 going forward?
Thank you, Daisy. Well, you just heard from Alan. Basically, he has given our baseline presentation for the region. The tariff shock is, as he mentioned, a big shock to the region because of the level. I think everybody was shocked by how high it is, but also because of the implementation, because Trump keeps changing his mind. So as a result, there's great uncertainties, and the uncertainty itself is very damaging because investors doesn't know whether to invest or not to invest, and for producers whether their products and the tariff is temporary, in which case then you can try to ride it through or to shift away. So fortunately, I think the region entered this shock with a position of strength, resilience. We know that the region is diversified away from the US, and the US share of our export now is only about 12%. And in terms of GDP, it's even smaller. The other strength that I think Alan pointed out is our fiscal policy space. The region has been very disciplined in terms of its management of the economy and accumulated quite a bit of policy space. So I guess now is the time to use the policy space if it's needed. So in terms of policy response, our view has been that it doesn't make sense to retaliate proportionately because that is like shooting yourself on the foot, and it's going to make the things a lot worse. So as we know, the ASEAN region as a whole has decided not to retaliate, but to negotiate. And so there's this pause of 90 days that Trump has announced, and so they're taking advantage of that to renegotiate the tariff if possible. So if you need to retaliate, our view is that you should target those goods which you can find substitution, so that it will not be reflected in higher prices as much as possible. So that's one thing, which is to negotiate the tariff if possible, and then to diversify as much as possible. Diversify both in terms of market, but but also in terms of industries if needed. Because the difficulty for the company or the firms is that if this is a permanent shock, then some of them may not be able to survive, going forward because of the tariff. So they may have to diversify away from, to find out new markets, but also maybe to move into new industries. And finally, for the policymakers, as I mentioned, they have policy space. So they should use the policy space to support the economy, particularly those which are affected by the tariff, right? So I think that the state can play an important role in helping them to find new markets and also to diversify away from the industry if needed, right? And the central bank, fortunately, because inflation has come down, it's been very well anchored, they have the room to ease monetary policy to support the economy. So those are the policy measures that we think policymakers should do. And finally, I think very important for the region to stay united. As pointed out, the region has grown rapidly, partly because of the intra-regional trade, which has increased to about 45%. And there's scope probably for that to increase further. So I think the region is one of the fastest growing regions in the world because of the rapidly growing middle class. So there's scope over the medium to long term to diversify further away from the US economy to intra-regional trade, but also with the rest of the world, right? So it's important that the region remains united and avoid the situation where they have to take anti-dumping measures against one another. Let me stop here.
Thank you, Dr. Goh. There's a question from Yichai on manufacturing jobs. Will the tariffs lead to shifts of manufacturing jobs to the US?
Well, that's the plan for President Trump. He's hoping that all these tariffs will bring the jobs back to the US. But we know from history, that if you try to build an industry behind a high tariff wall, you can, bring back some of the industries. But the industries, you're going to be ended up with very high cost production. So, for instance, instead of producing sneakers in Vietnam, you try to produce it in the US. First of all, you need to find enough workers. And secondly, the cost is going to be much higher. So you're going to end up with sneakers which are, several times the price that you can get by importing it from. So yes, definitely this tariff war will bring some industries back into the US, but it's going to be a high cost and they will not be competitive. And we know from history that, in the long run, the economy suffers from that. The reason why the region has done so well over the years with the industrial policy is because they've always been exposed to the global market. They have to be competitive in order to survive. And so that's an important lesson that we took from our experience. And so I think it makes sense maybe for, to try to bring back some of the so-called strategic industries, like medical equipment or even high-end semiconductor. But to try to bring all your imports back to the US, this doesn't make any sense.
Thank you, Dr. Koh. Still a broader question on the ASEAN. How is ASEAN addressing further disruptions in supply chain in this time of heightened uncertainty? This one is from logisticsnews.ph. And then there's also another related question. How will you translate the recent visits of China President Xi to Malaysia and other ASEAN countries?
Sorry, I missed that first part.
So the first one is on the supply chain.
Yeah.
How is ASEAN addressing further disruptions in supply chain in this time of heightened uncertainty?
Okay, let me address that first. So the trade is very disruptive to the supply chain. And I mentioned already some of the ways in which it can be addressed, which is by diversifying to new markets, and maybe if it's a permanent shift, you may have to diversify to other industries. But I think the question is the further disruption in supply chain seems to me that maybe you're referring to the fee that Trump has threatened to impose on ships, right? Docking, calling on the U.S. port, 1.5 million per call. And so, but this is going to be very damaging and very disruptive simply because China produces more than half of the ships in the world. And most of the shipping company would operate with some Chinese-built ships anyway, and those would be hit also with a $1 million per call. So this is, I think, currently under consideration, and I think a lot of the shipping companies are a bit worried about that, including Singapore, which is one of the hub for shipping industry.
Okay. Xinxiu Daily asks, how will you translate the recent visits of Chinese President Xi to Malaysia and other ASEAN countries?
Oh, yeah. So I think this goes to the point that I made earlier, that the region needs to stay united, right? And we know that China has retaliated, but so in that event, the economy will be hurt quite badly unless the Chinese are able to support the economy. But we know that China has the policy space to support the economy, and they have come out and announced that they are going to do whatever they need to in order to show up growth in the economy. So that's an important way in which the China can also help to support the region. The other is that China export 450 billion worth of goods to the US, some of which will be affected badly. So it's important for countries, to avoid the situation where you have anti-dumping, right? And this can happen. So I think it's important for China to, but on the other hand, China is also one of the biggest investor in the region, right? And there are new products that has come out, EVs, batteries, and all the renewable energy products, solar panel and wind turbine. And China can, play a major role in terms of the diversification of the economies by, helping to invest in new industries and also helping them to diversify away from the US market if necessary.
Thank you, Dr. Koh. We'll take one more new question online, and then we'll open up the floor for questions. This one from Bloomberg. Is it possible for Asian countries to give President Trump what he wants, lower trade deficit, lower barrier to entry into their respective countries, etc., without harming their domestic economies?
Well, at the moment, the tariff on US products is quite small, okay? Quite low anyway. So there's not a lot that countries can do. But some countries have very high tariff, on the US, but they don't import a lot from the US. So for them to cut the tariff down to a low level is not a big problem for them. But I think that's not going to help because China, Trump has already announced a minimum tariff of 10% or 20% on all imports into the US, and that's going to continue, right? So it may help to reduce the existing level of tariff that was announced further, but it will not, get rid of all the tariff that because Trump needs the tariff in order to be able to raise the revenue that he needs in order to pursue his other agenda, which is to cut taxes and free up the economy.
Okay, thank you, Dr. Koh. I think now we open up the floor for our journalists joining us in person here. I would like to invite Ms. Liu Chang. CCTV.
Thank you. I'm from CCTV and CMG. My question is, the AMRO forecasts China's economic growth at 4.8% in 2025. I would like to know why it is 4.8% and what is the basic for this projection. And in your opinion, what will be the main growth drivers for China's economy in 2025? Thank you.
Yeah, so the 4.8% stands out. It's quite optimistic. It is for China, right? Yeah, so we know that the Chinese have targeted 5% when we were doing the report. We felt that with the Trump tariff, exports is going to be affected, and so it's going to be quite challenging to reach 5%. So our forecast is 4.8%. But with the new tariff of 145%, obviously export is going to be hit quite hard, right? So, without any policy response from the authorities or policymakers, growth is going to be shaved off by another, 0.5% to 1%. The first quarter of the year is very strong, right? It's going to be more than 5%. But the second half is going to be quite weak. And so all in, we expect growth to be shaved to maybe even below 4% for next year, by next year. But we are confident that the Chinese authorities will take measures to support the economy. And with that, as I mentioned, they have fiscal space. They have already announced a number of things that they are going to do in order to encourage consumption, like trade-in program, cash transfer, and there's a lot more they can do. And also, I think they have this special bond program, which is to help the local government as well, free up the debt so that they can spend more. So there's a lot more they can do on the fiscal side in order to support the economy. And also the PBOC has announced, likely to announce measures to support the economy by cutting the triple R and also lowering interest rate some. So all in, I think we're looking at growth of still in the 4%. I think we look at some of the consensus forecasts, they're about 4.5%, right? So I think even most of the private sector analysts, the investment banks, they are looking at growth of around 4.5%, which I think is relative to our forecast 4.8 is quite not bad.
All right. Thank you, Dr. Koh. One more question on the Chinese economy is from China Daily. Is the Chinese economy reaching a tipping point where new economic drivers such as AI+ can fully or largely offset the decline of traditional ones like real estate?
Well, it's a very interesting question because we know that China has now emerged as the most competitive producer in several industries, EVs, batteries, solar panel, and wind turbine, and even in medical equipment, in pharmaceutical. The Chinese are coming out with a lot of new products. So it's likely that these new products are going to be the new exports for China going forward, and they may displace some of the traditional products which they have been producing, like garments, consumer durables and all that. So there definitely has been a shift. China has gained, I think, competitiveness in these new areas. But on the other hand, I think some of the other products, especially those which are targeted by the tariff to the US, they may diminish over time, and the new products take over as a new export product for China. I think that's going to happen. But in terms of the real estate sector, it's quite different. Real estate sector is not something you can sell. And it affects the economy more on the demand side rather than the supply side. Right now, the economy, the real estate sector is in a downturn. We see signs of recovery right now, but it's still relatively weak. We hope that you get fuller recovery by end of the year and early next year. And the real estate sector will be very important because it's going to help to still support demand, both investment as well as consumption. Consumption because a lot of the houses are purchased on durable goods are linked to the real estate sector, so furniture, appliances, and all that. So with the fuller recovery of the real estate sector, that will provide the boost from the demand side. At the same time, on the supply side, you have all these new products that are coming out. And these new products, many of them are not even exported to the US because of the tariff. But there's definitely great demand for this product from the rest of the world because of the climate change and the shift from the green transition that's happening. So power plants and coal power plants and all that are going to shift eventually over time to more sort of green type of energy like solar panel, wind turbines, and all that. Let me
One more question on China-US decoupling before we move on other countries. This question is from the ASEAN+. How and how much will US tariffs on China accelerate Sino-US decoupling, and to what extent will ASEAN be able or willing to be a replacement for the US market?
Yes, I mean, the tariff will definitely cause exports of China to, to drop quite substantially unless there's more exemptions of the goods imported into China. But, as I mentioned earlier, China exports almost $450 billion of goods to the US. So even with all the exemptions and it's likely that, there'll be about 200 billion or more of products that is going to be affected. So the question then is the market in ASEAN big enough to absorb this product? Not likely. Over time, it's possible that some of these products can be diversified away. Not just to ASEAN but to other markets as well. But also there will likely also be a shift in terms of diversity away from those products into other new industries. And I just mentioned, for instance, the renewable energy industries as well as EVs and all that. So there'll be a lot of reconfiguration happening because of the tariff, and this is going to be quite painful. But fortunately, I think the authorities have sufficient policy space to help support the economy through this transition. Yeah.
And if I can just add on, I think if taken at face value, the tariff is actually more about US decoupling from the global economy rather than US-China decoupling, right? And I think when we look at the situation in ASEAN, and China, I think it's very important that we also acknowledge that there is a change in the form of engagement, economic engagement between China and the rest of ASEAN. I think to look at it from a perspective of redirection, just from an angle of redirection of trade to the region is a bit simplistic. I think the engagement has become much more complex. For example, FDI into a region has actually increased quite a bit. In fact, since the pre-pandemic to now, we have seen a double in FDI, and that will actually change the nature of engagement. So it's not just about China selling to ASEAN; it's about creating a more integrated regional economy.
Thank you, Evan. Okay, let's move on to Cambodia. There's a question from Khmer Times. Cambodia was imposed the highest reciprocal tariff by the US president. Considering the huge reliance on US exports, how can the country devise strategies to overcome this setback?
Yeah, indeed, it was a shock that it got hit with 49% tariff rate. And they are also very highly dependent on China in terms of the export share of total export. So yeah, so Cambodia is likely to be hit, but Cambodia has gone through the pandemic relatively well. It's very resilient. They have built up policy space. They have followed a very strict discipline policy. So we feel that despite the tariff shock, and hopefully with the negotiation they can bring down the tariff from the 49%, the economy will still be able to register relatively robust growth. We had projected 5.8% for this year and 6% for next year. So growth could be shaved down by about half a percentage point to 1 percentage point next year, and there's sufficient policy space, fiscal policy for the government to help support the economy. So the economy will be hit, yeah, for sure, but we think that it's manageable because of the strong fundamentals that they have.
Okay. One more Cambodia question from Kiri Post. Despite a moratorium on US retaliatory tariffs and negotiations between Cambodia and the US happening soon, how do you see Cambodia's economy faring? amid a pressure on its key exports to the US, its largest market. How do you see Cambodia's economy?
Yeah, so as I mentioned, the economy will do quite well, we think. And it will be under pressure, the growth will be lower, and exports may have to be redirected, to other markets. I mean, the two biggest markets for Cambodia's export is the US and Europe. And they already graduated from, I forgot what the name is. But in the case of the US, they no longer enjoy the preferential tariff rate, but they were still doing quite well, and they recovered very rapidly last year, after the pandemic. So unfortunately, the new tariff, that's going to be a shock to the export to the US, and hopefully they can, diversify away from the US market.
Okay. On other countries, let's move on to Vietnam. There's a question from Vietnam television. Please comment on the prospect of Vietnam economy and its major challenges. What are AMRO's recommendations?
Yeah, Vietnam is one of the strongest performing economy in the region, as we all know. Last year they grew by 7%, and this year we are looking at 6.5% and 6.2% for next year in our baseline. Now with the tariff shock, the export is likely to be hit quite badly because they also have a big share of the export going to the US market. But they are in a negotiation with the US, and hopefully they can bring the tariff down. But Vietnam is in the longer term we feel it's very promising because it has very strong fundamentals. It has very disciplined on the fiscal side. It has built up fiscal space. The debt GDP ratio is low, so they can use fiscal space to support the economy and also to build infrastructure and all that. So there are measures that they can take on the policy side to support the economy in the short run, until the dust settles and they know what the final tariff rate is going to be. But also, because they are also one of the favorite destinations for foreign investment, as we know. So they have attracted a lot of investment in the past, and many of these investments may now have to restructure and diversify into other industries. But we feel quite confident that China is attractive enough to be able to continue to attract the investment, and they are also flexible enough to be able to restructure the economy.
Okay, one more question on Vietnam. Given the rising global trade tensions, this is a new question from Vietnam News. What further measures does AMRO suggest Vietnam should take to safeguard its economic recovery and sustain its foreign direct investment inflows?
I think, in terms of measures, until the dust settles, it's very hard to know what else you need to do. So at the moment, they are negotiating with the administration on, to lower the tariff. So I think that's the immediate priority. But once they know what the final tariff is, it will give a sense of which are the industries that are competitive, they can, and which are the ones that they need to restructure. So that's important, and also there may be scope. I think one of the areas where Vietnam can do more is to build up the infrastructure. And they recognize that, and they are doing that right now. They're building the railway, high-speed rail, and all that. So that is going to improve the attraction of Vietnam even more to foreign investors. I'm not sure about the incentive that they have for foreign investors. But obviously, they've been quite successful in attracting a lot of investment.
Thank you, Dr. Koh. There's a question from Manila Times on regional currencies. Do you have forecasts for regional currencies for the rest of 2025? The US dollar has weakened sharply in recent days against major currencies. What are the implications to the ASEAN+3 region?
Yeah, we don't forecast regional currency exchange rate, but I think this shock has been quite different from previous ones in the sense that usually when there's a shock and risk aversion, goes up, you have a huge outflow, capital outflow, and the exchange rate will come under tremendous pressure. On the other hand, but if you watch the exchange rate this time around, they have held up pretty well against the US dollar, and that's because the US dollar itself has come under pressure, right? So there's a lot more uncertainty in the US, which is creating a lot of pressure on investors, to the point where the US dollar has actually weakened, although now it's strengthening again. So we're getting to a situation where the exchange rate has come under pressure, especially some of them. But overall, the currencies in the region have held up quite well. And fortunately, also the central banks have ample reserve. Most of them, they are able to intervene when necessary to avoid the excessive volatility and to support the exchange rate from overshooting or undershooting. But by and large, I think the exchange rate have held up well, and they should just let the exchange rate move, in line with the market forces.
Thank you, Dr. Koh. We got a lot of questions on the country, so we are trying to address them one by one. This one is on Indonesia from Jakarta Globe. How will Trump's tariffs affect Indonesia's growth, particularly President Prabowo's goal of achieving an 8% growth within his term?
Well, it's going to be quite challenging. Really, it's quite challenging even before the tariff, because Indonesia has done amazingly well in terms of sustaining 5% growth, for several years now. And to raise it to 8% is not impossible, but it will require quite a lot of investment and structural reform. And so I think the authorities are aware of that. They're trying to attract more investment into Indonesia, and also to raise more funding, savings. They set up what they call Dana
Antara.
Yeah. So this is an investment fund, which is a bit of a holding company of the SOEs, and they're hoping that with that fund, they'll be able to raise funding for investment. On the other hand, I think at the moment it's important because of the tariff, the exports will be affected, and it's important for them to try to maintain stability and protect the stability of the exchange rate, as well as to sustain the growth rate as much as they can. So I would say that the ambition to achieve 8% is not impossible, but it has to be done over time. At the moment, because of this tariff shock, they need to prioritize their policy to trying to maintain stability, both of the exchange rate as well as the overall economy, and try to ensure that the economy continues to grow at least 5% a year.
One more question on Indonesia is a new question from the Straits Times. Could you speak a bit about ASEAN's largest economy, Indonesia? There are lots of worries about Indonesia. What are you seeing as the challenges, and what can be done to fix the issues for Indonesia?
For Indonesia or for the
Indonesia.
What are the challenges?
Yeah, it says there are lots of worries about Indonesia. So what are you seeing as the challenges, and what can be done to fix these issues for Indonesia?
Yeah, I mean, Indonesia, as I mentioned, has done amazingly well in terms of sustaining growth at 5%, and it has actually graduated from, into investment grade, and, in the last several years, I think the macroeconomic management has been quite, very skillful and strong, and that's one of the strength that they need to preserve. The discipline that they have in terms of fiscal policy and also monetary policy, and then they need to do a lot of structural reform in order to try to raise the growth potential. They started on that, with the previous government by freeing up the labor market and also by freeing up the investment regime to make it more attractive for investors to come in. And also they had this downstreaming policy that they implemented, which was very successful in terms of raising, adding value to the exports. And export of nickel, I think went from 1 billion to 20, 30 billion. So many of the measures they are taking, are very attractive for investors, and they be able to crowd in the investment from outside. At the same time, I think they need to preserve the macro stability. And here, I think they should continue to maintain a relatively tight monetary fiscal policy to make sure that the environment for investors remains stable.
Thank you, Dr. Koh. Sorry to keep some of you waiting, and we are now moving on to Malaysia and the Philippines. On Malaysia, this is from The Edge. What is your view on ASEAN's stance on non-retaliatory measures against US tariffs? Can this protect Malaysia in the long term?
Daisy, why don't you ask the Sin Chu one as well? So, similar questions, so similar answers. I think.
Sure. One more question on Malaysia from Sin Chu Daily. What is the outlook for the Malaysian economy, and what is the impact of the US reciprocal tariffs? So, both on Malaysia economy.
Malaysia has been doing very well in attracting investment recently because it has a very strong electronic cluster, right? A semiconductor cluster. Intel has been there since the 1970s, and because of that, they have managed to maintain a very key role in terms of the semiconductor supply chain. And more recently, they've been attracting the data clouds and data center, and they're trying to move upstream in terms of the semiconductor industry. So, and fortunately, also semiconductor is one of the industry that is exempted from the tariff, and because of that, it's reduced the effective tariff somewhat. So I think over the long term, we're still quite positive about the Malaysia's long-term prospect in terms of reindustrializing and moving up the value chain on the semiconductor side. So although the tariff will affect them, it's affecting most of the other sectors, like for instance furniture. I think a lot of the furniture industries are now desperately trying to ship their furniture out before they get hit by this huge tariff. Similarly, so it will not be. I mean, there will be some pain for sure because of the tariff, but the economy, I think, is sufficiently flexible, and the government has sufficient fiscal space to be able to support some of these industries that will need to restructure because of the tariff.
I think if I can just add on very quickly, I think the most important thing is actually not to just respond in a narrow sense on the tariff situation. I think the key thing is actually to think what are some of the other policy measures, especially for the longer term, that could actually be robust to the changes that is being imposed from the US. I think one of the key things is actually diversifying our export markets, and this will actually help Malaysia and also the rest of the region, right? How do we diversify our export markets, our products beyond just the US? I think this will be a key robust strategy that most economies would benefit from. Malaysia as well as Vietnam, and so on and so forth.
Thank you, Alan. A couple of questions from the Philippine media, Philippine Daily Inquirer and Malaya Business Insight. Why did AMRO retain its 6.3% forecast for 2025 for the Philippines despite the tariff-induced global headwinds? What are the expected growth drivers for the Philippines? And then what will be the impact of the US tariffs on the Philippine economy? Does the Philippines stand to benefit or lose?
Yeah, Philippines is a service-oriented economy. The manufacturing sector is less, is important, but it's much smaller size share of the economy compared to the other ASEAN countries. So because of that, I think the tariff impact on the Philippines will be much lower. And also it produces semiconductor, which is exempted. So our assessment has been that the tariff rate is going to be much lower and the impact is smaller. So we have also shaved down growth of the Philippines. I think you probably have seen the numbers that we have. It was 6.3 before, and now it's going to be slightly below 6%. So yes, the Philippines will be affected much less than the other countries in the region. The strength of the Philippines is their service industry, especially the BPOs, and going forward the KPO, I think knowledge base. So we think that the Philippine economy generally will emerge from this tariff war quite well.
Thank you, Dr. Koh. One more question on the Philippines. AMRO said the Philippines is still anticipated to maintain potential growth above 3.5% through 2040. Can you
3.5?
3.5% through 2040. Can you please explain on this and what are the opportunities and challenges ahead? So, on the long-term growth.
On the Philippines?
On the Philippines.
We have 3.5% potential.
I think it's a long-term growth, chapter 3. Chapter 3 related.
Oh, so maybe you can comment on that.
I think it's a similar diagnosis for long-term growth for the Philippines as with the rest of the region, especially in the middle stage economies. The Philippines, we are categorizing as a middle stage economies. One of the key factor that could actually improve the Philippines' potential growth is actually productivity. So efforts to actually improve productivity will be key. And this can be done through productivity enhancing infrastructure, as well as shift towards areas that are also productivity enhancing. Then the last thing is actually, there are a lot of changes in technology that is rapidly evolving. The question is, how can we actually utilize them to transform the economy? For example, in the services sector, how can we use technology to actually upgrade services sector for it to create more value added, for it to create higher paying jobs, and so on. And not just in services, but also in agriculture, and so on and so forth. I think those would be key things to improve potential growth for the Philippines. In fact, in our simulation, we show that the Philippines will get another further above 2% growth if some of these reforms are implemented. So we are not looking at 3.5, we're looking at closer to 5.5 to 6.
Thank you. I think we have time for one more question. Let me check if our journalists here may have one more question. If no, I got one last question online. Can take this from Xinhua on Singapore. How do you evaluate the situation of the Singapore economy and its monetary policy?
Singapore just decided to ease monetary policy, and it does that by reducing the slope of the exchange rate. Singapore has done well. Inflation has come down to less than 2% now, which gives the monetary authority a lot of space to ease policy if needed. And they have very strong fiscal position, which they can use to support the economy. So Singapore is pretty much a service economy, but it has a significant manufacturing sector, mostly in pharmaceutical and semiconductor and chemicals. As we know, the semiconductor industry was exempted together, and they're looking at the pharmaceutical industry right now. So we think Singapore may not be as affected by the tariff thing, but it could be disrupted because of the global economy, and also because of the disruption to shipping, perhaps. So we are confident that although growth will be affected, it will probably be shaved down by 0.2 or 0.3 percentage point.
Thank you, Dr. Koh. Thank you for the many questions from all of you, and I'm afraid I have to conclude today's press conference here. For more details about the AREO report, you can make use of the QR code on this screen to download the AREO report. And on other AREO content, including the PowerPoint presentation, they are also available on the AMRO website. Thank you once again for your participation. Thank you. Thank you, Dr. Ko, and thank you, Alan.
Thank you.